straight into the slides, straight into the markets. Data released over the European session. What's the highlight for you?
I mean, it's not really a day of highlights particularly, Zach, but we picked up a couple of points here. So around industrial production and output. First of all, French industrial output for April, quite disappointing. This figure comes in at minus 0.9%, and that was versus a forecast of plus 0.4. So it's missed, and it's missed by 3 times as much effectively. And the prior read for this figure was 0.0%. So a slightly disappointing number from France there. We've got accustomed to seeing some better data coming out of France recently, but it looks like it could be back into its bad habit, yes, shall we say. In terms of the equivalent figure in the UK, UK industrial production for April, again the month-on-month figure, up 1.2%, the number we saw this morning, versus a forecast of plus 0.6%, so effectively beating that by 100%, and much better than the prior read of plus 0.4%.
That's amazing, isn't it?
Yeah, it is.
Ahead of the election and everything else, it was a really big win.
Yes, it is, and perhaps we do well to take that perhaps with a slight pinch of salt and look forward to the similar figure for April at the in the early part of July. We'll get that, won't we? Sorry, for May rather, and just draw a comparison. But I guess George Osborne can go to the Mansion House speech tonight with a bit of a spring in his step, shall we say, after that number. And the other big news this morning were the comments from the Governor of the Bank of Japan, Kuroda, who said the yen will not weaken relatively from here. What he was talking about is what's called the real effective exchange rate, or REA, and he's pointing out that on that basis the yen's back to levels it hadn't seen since 1973. I have to say I'm still a sceptic, but the yen rallied strongly on the back of those comments, although it's weakening again now as we speak. But let's give him the benefit of the doubt and see what happens from here.
Okay.
In terms of FTSE movers, I picked on Sainsbury's first of all. Those that aren't aware, this is their second largest grocery chain here in the UK, up 4.94%. They had results this morning. If you read the results and saw them in isolation,
miserable.
Oh, absolutely. 6 quarters of declining sales, very little positivity in there at all. However, the stock is higher today. The reason, the markets thinks they're not as bad as they could have been, and I also suspect that there's a degree of short
squeezing. Yes, exactly.
Yes, absolutely. Yeah, people who were on a bear.
Massive. It's one of the most shorted stocks on the market, so you're going to have these bounces. I think Tesco bounced as well today on that as well.
So that's it. That explains that. And then Weir Group, WEIR, the ticker there in London, one we've spoken about several times on the show recently, down 2.7%. The company's effectively issued a profits warning, and it blames oil and gas contraction. Spending contraction, that is. And for those not aware, Weir is a maker of pumps and equipment that's typically used in the movement of fluids and often oil and gas. So that's why they're down 2.7%.
It's not like a lagging indicator, you would say?
Well, maybe. I mean, but they've been sensitive to the Baker Hughes rig data as well. I have to say, I think most people are probably cute enough to realise what's going on in that industry. One thing I would say is that pre-market this morning, there were calls for them to be down 7 or 8%. So if they finish the day on this kind of performance, I think they'll have had a good result.
Right, okay. And on to the M&A.
Right, well, just really picking up an article that caught my eye first thing this morning about one of the biggest companies in the US and one of the most well-known, that is General Electric, or GE, which is the ticker and its colloquial name. They're in the process of selling up to $200 billion worth of assets, most of that from the financial services side of the business, including in that sale a private equity lending business which Canada's largest pension fund is in the process of buying for around $12 billion. Now that deal, as I say, is part of a massive restructure out of financial services and into industrials and healthcare, which the power of Jeffrey Immelt and the board of GEC as being growth industries. As part of that deal, they're trying to buy the energy business of Alstom from France for around $14 billion. Bloomberg, who've been following this very closely, suggested that GE could amass a war chest of about $40 billion for additional M&A, and the potential targets, I'm just focused on some US names here, they can include Biorad Labs in the healthcare space, that's BIO-US, Flowserve, and Pentair, Flowserve FLS, Pentair PNR, both of whom, coincidentally enough, are makers of pumps and equipment in a similar vein to Weir. So let's not discount Weir entirely.
Okay.
And I think you mentioned Smith's Group as well.
Yeah, well, that was the old. I think that was a very old story, which didn't quite come to fruition. But,
nonetheless, probably worth keeping an eye on all of those. It's not going to happen overnight.
Well, I think the other thing is also that it's easier now, probably with the tax inversion issue. It's easier for American companies just to stay at home, really, rather than
absolutely, and and buy what they know rather than expand abroad. Although obviously they are prepared to expand abroad in the right cases because of the Alstom deal. Anyway, some names to keep an eye on there. GE obviously is one of the bellwethers of America, probably the bellwether of the old economy in the States, and so keep an eye on those sectors because when they move quickly and don't mess about.
Right, the data points.
Slim pickings, I'm afraid, this week in US data. So we've got weekly MBA mortgage applications. We're looking for a positive number, hopefully ahead of, the bulls will hope for a read ahead of the 1% gain that we saw last week. But this number's been on decline really for many years, and it makes quite disappointing reading. We saw peaks in January this year and November last year, but since then it's been downhill.
Slow slide, yeah.
And then we've got weekly crude inventories today. The forecast is for a drawdown in the US of 1.7 million barrels. That's slightly less than the prior week's 2.8 million drawdown. So look for a negative number, but maybe not such a big one as we saw before.
Okay, and to finish off the levels.
Okay, well, I picked up two stocks here that caught my eye pre-market. Oxford Industries, that's ticker OXM in the US. These are the guys that own and make Ben Sherman clothing and a number of other proprietary brands. They announced good numbers last night after the close. Q1 earnings beat by 9 cents, so that was 1.30 that they reported versus $1.21 estimates, and revenues were better by 4 million or 1.56%. So the market likes that, and they're up as much as 7.39% pre-market. And then a stock moving in the other direction is Gulfport Energy. That's ticker GPOR US, down around 4.78% pre-market. They're buying 35,000 acres of shale prospecting territory from a rival for around $406 million. The key here, I think, is that they're placing 10 million shares to fund the deal, so the market's moved the price accordingly. And in terms of levels to watch, 67.35 I've gone for on the downside in the FTSE and 68.05 to the upside. For the DAX, we had 10,940 in on the downside and 11,071 as an upside level, but since we've been on air, the DAX has or just before we came in, the DAX have had a bit of a spurt. So I think now we should look at 11,144 on the upside in the DAX.
I was going to say 50, but
well, cool.
We're close. We're close.
There and thereabouts. As far as the S&P is concerned, 2072 is our downside level. Very interestingly, that was the absolute low in the market yesterday, and 2090 is a slightly tighter upside level now in the S&P. And for the Dow, 17,715 on the downside and 17,817 on the upside. And just stress again that was our upside level yesterday, and again that was the very top of the market. Spinning top candles in both of those charts. So
yeah, I mean it doesn't look very friendly. I mean the 2100 and 18,000 sort of lost quite comprehensively over the last few sessions, so that's looking a bit painful at the moment.
We've seen quite a bit of volatility in currencies over the last 24 hours. In euro dollar now, we're looking at 112.80 on the downside, plays 113.75 on the upside, so quite a wide range there as we search for final directional clues. Aussie dollar, US dollar, 77.07 I've gone for as a downside level, plays 77.88 to the upside. Obviously, the yen, the big feature of the last 12 hours after on those corroded comments. So 122.95 is the downside on the yen now, and 123.60 on the upside. But it has been rallying off of a considerably lower low this morning. And in cable, I've gone for 154.03. You could probably round that down to 154.00 if you prefer on the downside, and 154.75 our upside level.
All right, so still sort of following recent trends, lower on the indices. That's probably the main highlight at the moment, isn't it? Really, it
is. Although we're seeing something of a rally in the DAX today.
Okay, well that looks like the end of the Wall Street crossover show for today. Darren Sinden, market commentator at Admiral Markets. Thank you for coming in, and we'll have more of this at the same time tomorrow.
Thank you, Zach.